All right, I know we're towards the end of a long day in Vegas, so appreciate everybody coming out here. It's going to be a fun conversation because it's going to be very casual. It's almost like a campfire conversation. I was reading the other day that most history books that high schoolers read end in 2010. So in 2012, 2013, Gangnam Style came out. There was a blackout at the Super Bowl, and these three gentlemen started talking about, in a very public forum, why people should start looking at Bitcoin. So without introductions, my name is Nathan Stump. I'm a director here at BitGo, and we're really excited to have these three talking about where they were in 2012, 2013 when they first started getting in the industry to where we're at today, and did they really believe we were going to be here? So I'll start off with Ben. Introduce yourself.
Awesome. I'm Ben Weiss. I'm the CEO and co-founder of CoinFlip. We own and operate 6,000 Bitcoin kiosks in 10 countries. And in 2013, 2014, I just found out about Bitcoin. I was still in college. And I think it's sort of Bitcoin hit me. The power of Bitcoin hit me when I was looking at my wallet. And I realized that if I have this Bitcoin, it's physically impossible for my roommate to have the same exact Bitcoin. And I was like, holy crap, there could be a whole system of ownership and value on the internet. And I grew up like in the LimeWire days where there was no way to sort of protect property. You could make unlimited copies of everything. So that's when it sort of hit me, 2013, 2014. And I was still in college. I think I bought my first Bitcoin going to Western Union and sending money, God knows where to get it. So it's been a long evolution since then.
Yeah.
Yeah, sure. So my name's Stephan Livera. I mostly known for my podcast, which is a Bitcoin-focused interview show, education and media. I guess that's probably the category I'm mostly in. But I am also an investor and sometimes investing in Bitcoin companies and advising Bitcoin companies as well. I guess when I started in Bitcoin, for me it was sort of late 2012, early 2013. Bought my first coins in early 2013. And so I got into this space mainly because, I was a libertarian, or I was already anti-fiat currency, but I didn't see, until Bitcoin sort of came up and I had it explained to me the right way. I didn't think there was a hope for that kind of thing to really play out. And then once I saw Bitcoin, it was just like, oh my gosh, this is amazing. And so then I was, shouting from the rooftops since early 2013.
And so my journey was started in about 2011, 2012. So I created my Mt. Gox account. I created it in November of 2011. So that was my kind of first foray into it. Now, a buddy paid me back for a beer with a Casasius coin. And the Casasius coin are the gold coins, and you see in the news articles. And so he paid me back for a beer, and the first thing I tried to do with it was sell it. I'm like, this is some bullshit magic internet money. This thing is a scam. I got to sell this thing. So tried to sell it and then realized it was kind of hard to do, and then went down the rabbit hole a little bit more. And because I had studied finance in undergrad during the 2008 financial crisis, I had already been radicalized with the idea that like we can't trust banks, we can't trust our government, we can't trust central banks. And so after going down the Bitcoin rabbit hole, reading a bit more, realized that this is the solution to the central banking problem, to the problem of trust in our financial system. And so that plus Silk Road's resiliency and, to Ben's answer around seeing peer-to-peer networks like, file sharing networks and seeing how resilient those were, and also seeing how resilient Bitcoin was on the dark markets, that represented something permanent, that a government couldn't shut this thing down. And that was that was my aha moment. And that was probably like late 2012 is where it really kind of clicked for me.
Dan, Stephan, you guys have a large following when it comes to the early days of just tweeting, buy Bitcoin or whatever those first tweets were. Dan, your Forbes article, you and I have talked about this, like your Forbes article of trying to buy people, I can't remember if you were at Chipotle or where you were, but you're trying to get people to buy.
Yeah, that was Kashmir Hill from Forbes, was a journalist early in the space, and she lived on Bitcoin for a week in 2013. And there's a famous video clip where I've got long, shaggy hair, very different from what I look like now. And young Dan, almost 12 years ago, and basically she's trying to tally the bill, and I had built an app that lets you figure out the price of Bitcoin on a second-by-second basis. It was called Zero Block. But yeah, Kashmir Hill did a series where she lived on Bitcoin for a week in San Francisco. And it was, the early days, there's only a handful of journalists that were covering it.
Did you, either one of you, and Ben will go to you next, did either one of you expect to have JD Vance talking on stage, Trump last year, and be where we're at today? Or to your point, you understand the peer-to-peer aspect, you understand the process of it, but where we're at now?
I would say the big mistake I made when I was new, and it's a common thing for when I was a noob in 2013, I thought hyper-Bitcoinization would be like a year or two away. I just thought it was all going to happen so quickly. And probably the big thing now is more like, no, actually, even where we are now, it might still be another 20 or 30 years out. So just be ready for that. Just accept this is going to be a long process. So while I guess in 2013 days, even hitting $10,000 would have been incredible. It would have been this incredible milestone. I guess somewhere in the back of our minds, for many of us, we thought, Bitcoin is going to take over the world already. But at the same time, it's come so far now that literally the sitting vice president is talking at the Bitcoin conference. So, I mean, I think the big mistake I and many others made is thinking it would happen so quickly. But now it really is starting to happen.
Yeah, and it's still, I think the market cap of gold is 17 trillion or 18 trillion.
It's a bit over 20 now, I think.
Over 20. And what Bitcoin's 3 trillion, 4 trillion?
Just at 2.2 or something, 2.1?
Yeah. So we still have such a long, it's been 10 years and we have the vice president, talking about Bitcoin and crypto and the president embracing it, and it's still a tenth of the market cap of gold. So there's still a ton of upside and opportunity, in my opinion.
In the early days, I think too, I agree with Stephan. It was. I thought it was all people were all going to wake up to Bitcoin really quickly and be like, "This is a huge thing," but it takes a lot longer. And there's a famous quote that the progression of science occurs with the death of every scientist. The old scientists die, and the new ones come up with new ideas that are allowed. And I think it's a generational thing. I think it'll be 20, 30, 40 years. It's an age cohort thing. And then also there was a kind of funny feeling that we all had in 2013. In San Francisco, that was like the hub. You had Brian and Fred from Coinbase, Charlie Lee, Jed McCaleb, Jesse Powell. We all went to the Bitcoin meetup in San Francisco. That was kind of the crypto hub of the world at the time. We thought we were going to get our doors kicked in by the FBI because we were making this blatantly, aggressively anti-U.S. money, right? Satoshi even in the white paper in the first block etches, UK Chancellor on the verge of second bailout for banks. I mean, this is a money that is aggressively anti-state. And I thought that they would have figured that out. And for some reason, even through today, you've got the president and vice president hard shilling Bitcoin, and they're seemingly okay with it. I'm like, this money was literally made to make you obsolete.
And I'll just add, I think part of the context as well is a lot of Bitcoin, because nowadays you've got podcasts and books and all this stuff, but in those days, there wasn't as much good material, right? So the best you could probably find was an Andreas video, maybe, or a few forum posts and some crappy articles, but they would get some of the facts wrong and things like this. But one of the things you were learning at that time was, hey, look what happened to eGold. Hey, look what happened to Liberty Reserve. Those guys got shut down because the state shut them down because they didn't do KYC, AML, and all this other stuff. It was seen like they were challenging the power of the state, and that's what Dan was getting at. Many of us, at least in those days, now I was in Sydney, I was growing up in Sydney, Australia and whatever, but I was following from online, and it was seen as this anti-state money. So of course they're not going to get on board. But now it's kind of there were other people talking about this idea of, okay, it's eventually going to capture the state, right? There's this principal agent problem that the individuals inside the state, they may have their own reasons to hold Bitcoin. Or if you listen to the Trump family, they'll explain it look, people in the state came after us and they debanked us and they called us, criminals and all this stuff. And so they had their own personal reasons to buy Bitcoin, hold Bitcoin, invest in Bitcoin, or be involved in Bitcoin mining and Bitcoin companies.
Now, if we look at the landscape today, on-ramps and off-ramps are much more prevalent, right? The exchanges, it's much easier for me to send assets. We have fiat accounts. Clients can send us dollars and convert into BTC. CoinFlip was an ATM operator and still is one of the largest, if not the largest ATM operator globally, right? How did you guys buy it first? How did you guys buy it at first? And how have you seen that landscape evolve from ATMs and, from the early days to where we're at now?
I mean, I went to Western Union. I sent money to God knows who. I met someone at a McDonald's, at a Starbucks. I would, buy Bitcoin in person. I think that's sort of how we came up with the idea of the ATMs, is we wanted to have that in-person sort of physical experience. Like, in a way, I appreciated meeting someone in person who could say, this is how you set up a wallet. And I appreciated, being able to use cash to buy Bitcoin. But that was the whole reason for the ATMs. Now we have ACH, we have debit, we have wire, we have the exchanges. So I think, having more and more on-ramps and off-ramps to crypto just shows how far the space has come.
Yeah, I think it's a range of things. There were people doing, peer-to-peer stuff. There was the infamous, not for me personally, but there was the infamous kind of Bitcoin-OTC IRC channel, and that was like a peer-to-peer thing in different countries around the world. So in Australia, there were like bank transfer kind of services where you would like transfer or like do a cash deposit. And I guess the AML rules hadn't advanced as much in those days, so there was a stronger no KYC aspect of it in some elements of the community. But then, of course, there was the other big exchange around at the time was Mt. Gox, the infamous Mt. Gox. And so there were people who were, wiring money to them and to Japan to send some fiat so you could buy Bitcoin. So there were a few of these different things. And, there were kind of early exchanges, but not that many.
Yeah, I mean, it was really just Mt. Gox and Bitstamp. And Mt. Gox was 95% of trading volume at the time. Now, that was a pretty scary moment in 2014 when it collapsed, because that was almost all of trading volume, and we weren't sure how it was going to come back.
Did you feel that it was over at that point?
I mean, I still hodled, but it was pretty depressing.
Yeah.
I mean, it wasn't great. Bitcoin went down all the way to $200, like 180, 190 in the bottom of 2015, where, I had a lot of people around me telling me maybe you should sell and get out now while you can get out. I mean, remember, like, the cycles weren't like an established thing yet. Like, after 2017, it felt more repetitive. It felt like this was predetermined, and the halving narrative wasn't a real narrative. There was no halving price speculative narrative. It was like maybe 2013 was it. I mean, granted, there was two run-ups in 2013, March 2013 and November 2013, where it went from $10 to $260 back down to $100, $100 to $1,200, and then in 2015 went down to 200. But yeah, I mean, getting Bitcoin back in the day was super difficult. You had to use Dawala and Dawala to Mt. Gox, or you used BitInstant, or you went to Western Union, and I did that once, but that was really scary because you basically give them cash and you just cross your fingers and then it like appears and you're like, okay, I guess I didn't get scammed. I mean, it was pretty brutal. And people forget too that Coinbase was not an exchange. Coinbase wasn't a brokerage back then. Luckily, they sourced their Bitcoin from Bitstamp, not Gox. But the world might be a different place if they had sourced it from Gox. So Coinbase was a huge breakthrough in user experience because you could just go buy Bitcoin through them. And it took like 3 or 4 days to settle, though. I don't think people remember that, but it took a while to like settle the transaction. But Coinbase made it way easier to buy, and that was their big value prop in 2013, was that it was the easiest place to go buy Bitcoin.
Yeah. So if we continue the journey, 2013, we just have BTC, and then obviously there was an ICO on other assets, but we're not here to talk about all the other assets, but what we're here to talk about is Bitcoin, right? There's been a lot of commentary around the Bitcoin ecosystem, right? Is it just BTC or the ecosystem behind it? Dan, you have a strategy that looks at the entire industry. I know you've talked a lot about this on your podcast, and at CoinFlip, you guys have expanded into a range of assets. I mean, how do you guys think about this ecosystem today, but specifically being at the Bitcoin conference, the Bitcoin ecosystem?
I'll say at the kiosk because it is sort of a newer user potentially. It is Bitcoin heavy, like 75 to 80% of our transactions are Bitcoin, which is probably higher than some of the online exchanges. We have seen stable coins go up and up, like about 15% of the business is stable coins, so we're definitely weighted heavy towards Bitcoin and then stable coins. Then in some of our markets outside the US, stable coins could be over 50% of the volume. So, it's interesting because it's like Bitcoin's this anti-state thing and crypto's this anti-state thing, but there's this thing, stable coins, which arguably make it easier than ever for foreigners to hold the US dollar.
Yeah, I mean, I've been pretty, maxi in my views, but I would say I I'm okay with stablecoins, but like I see that as like people just need ways to easily move fiat around. So I don't really have an issue with stablecoins. And I guess because of that, kind of the pragmatic aspect of that is the transport rail on which many of these stablecoins are going is using shitcoin rails, right? So it's like whatever it's Tether on top of Tron or Ethereum or Solana or whatever. So that people would just incidentally use those. But I would just say just be wary. It's not that value is going to accrue to those things. You're just using. It's like you're paying for the bus ticket. You don't need to go and like speculate on the future value of bus ticket prices. You just kind of use it only for the stablecoin transfer that you're doing, and of course use Bitcoin as your dominant store of value. Is sort of how I'm viewing the space. And then, of course, I'm seeing a lot of interest in things like lending and collateralized stuff. There's massive interest in that. And I think the other big development that everyone here is probably familiar with is kind of the new top of funnel, in a way, is Bitcoin ETFs and treasury companies. I think that's going to be like a lot of people are going to come in, like people say, hey, I'm in it for the tech and all this stuff, but the reality is number go up is going to be far more powerful and far more attractive to normal people out there than however many podcasts or articles or whatever we might write about or speak about or do. So the newbies of the next year or next few years may be into these ETFs and treasury companies, and then they sort of have that rabbit hole journey. Not all of them, but many of them, about learning actually, okay, not your keys, not your coins, and all these things we say.
Yeah, I think we've actually talked about this in your podcast before, where it's like, come for the speculation, stay for the sound money. Humans are going to be humans, and greed is an extremely powerful motivator. And we wouldn't be here today if Bitcoin stayed at $1,000 for the last 10 years. We're here because the number went up. People saw that. It was the greed in them wants to make money. They buy Bitcoin, and then they learn about it. Most people don't learn about it, then buy it. A lot of us did on the panel, but we're an extreme minority. Most people eventually kind of just go, okay, I'm in. It went up to $1,000, and I missed out on it. Now it's at $5,000. Okay, I'm going to buy. And so the number go up is really, as Stephan Livera put it, that is the primary user acquisition method of everyone in Bitcoin. Is most people came here for profit seeking, and that's not a bad thing. Satoshi actually hypothesized that Bitcoin could be its primary adoption method might be purely from speculation. And he actually says this verbatim, basically, is around that Bitcoin could be just purely because of number go up. That's how Bitcoin might get adopted, that it may not be for payments, it may not be for something else. Satoshi was very encouraging of using Bitcoin for any possible use case. He wasn't sure what was going to drive adoption. That's where he's encouraging people to spend it. He's saying maybe speculation will drive it. But all in all, basically, I kind of see the Bitcoin ecosystem is you've got like CeFi technology and DeFi technology. So CeFi are centralized companies that have complete control of your assets when you use them. Kraken, Coinbase, those are companies that are prime examples of that. The problem with that is you have counterparty risk, which means that you have to trust Kraken, you have to trust Coinbase. Those entities are still needed, though, because there's not easy ways to do that in a trustless manner. But the new world of DeFi on top of Bitcoin, I think, is really cool. And there's a lot of different ways that DeFi can unlock a world where we don't have counterparty risk. However, there are other risks, and I want to add a caveat here where a lot of people think of DeFi as risk-free. It's not. You still have protocol or code risk. The code could have a flaw in it or an exploit. So DeFi, though, is kind of a new emergent, I would say, category of Bitcoin adoption and Bitcoin building that we saw happen over on Ethereum and Solana. And I think it's very value accretive to the Bitcoin blockchain because, for example, like a basic function that people use Unchained Capital for is to borrow dollars using your Bitcoin as collateral. You could do that in a manner where you don't have to trust a counterparty.
Do you feel like, though, there's a lot, not your keys, not your crypto from the early, and I feel like that has continued to evolve, but if it wasn't fully centralized, would we even be where we are today? Because the on-ramps and off-ramps and the ability to buy the asset wouldn't be as prevalent?
Something I'll just quickly add to here is even like with Dan's point about how science progresses one funeral at a time, it's a similar kind of thing. If you think of where is most of the wealth today, kind of statistically, it's a lot of wealth is held by boomers and they're holding it in like their stock brokerage, normie TradFi platforms. And so it's going to take a while before it all kind of becomes on-chainified, let's say, or tokenized in that way. So I think there is going to be a lot of, these worlds are going to merge, right? You're going to have like the TradFi world merge with like the sort of crypto Bitcoin token world, but there's still a lot of wealth that's in the so-called TradFi market, and I think ETFs and treasury companies are, let's say, tapping those markets. But over time, there's also these technologies and things that allow you to, borrow against your coins, and people like, a lot of interest in lending and that kind of thing. So we're going to see that growth accelerate, especially in the bull run. But then, of course, we'll have another bear cycle, and there'll be people who lever up at the top, and it's the worst possible time, and all the, I don't think cycles are past us. We're going to have more of them.
And I want to add one more thing here. A lot of people ask me, hey, Dan, do you like MicroStrategy, or do you like Metaplanet, or some of these Bitcoin treasury strategies where they buy Bitcoin, and when you buy the equity, it gives you some representation. There's Bitcoin on the balance sheet, and it trades at some sort of multiple above NAV. Well, call me old-fashioned, but if you want to own Bitcoin, you should just buy Bitcoin. I think a lot of people are looking at MicroStrategy and other ways to, take a levered bet on Bitcoin. It's pretty risky, and if it's trading above NAV, it means it's trading above its base value, the value of the underlying Bitcoin on the balance sheet. So look, if you want to own Bitcoin, just buy Bitcoin.
One thing you mentioned was stablecoins, right, being built on top of assets that are unfavorable, as you might say. But if you're in a third world country and you operate, obviously, in a lot of ATMs outside the United States, if you're in a third world country and your income is $20 a day, something like that, the fluctuation of Bitcoin, we can sustain. We're fortunate enough to sustain that today, but they can't sustain. And which is, do you see Bitcoin having, like, how's that threat play into all those countries where they can see the net worth drop 20% at one point? Obviously, it's dampened a lot over the years, but see that net worth drop at one point versus stablecoins having some sort of base value.
Well, I'll just say from like customer behavior that we see, I think you're 100% correct. Stable coins, it's hard for something to be an asset and a currency or a payment system at the same time. If you think it's going to go up, why would you spend it? So in my opinion, it's sort of one or the other. So what we see is a lot of consumers in these countries using sort of stable coins as their day-to-day money or their checking account. And sort of as they get to certain levels of savings, then putting it into Bitcoin as sort of their savings account. So again, I'm sort of in favor of anything that sort of makes it easier to get into Bitcoin. So I think, stable coins, we see a lot of customers who start in stables till they build some reserve and then they flip it into Bitcoin.
Yeah, and I think that's a fair argument. I agree. Like, I think if you look at, I think Paolo from Tether has said they have, I think, over 400 million Tether users globally. And that number of Bitcoin users, it might be like 100 million, maybe just a little over that. So it kind of does make sense that there's more people who want access to the dollar for now. Of course, longer term, we believe it's all going to Bitcoin, but I think it does operate as a stepping stone. So that's why, for me, it's okay. If people need stable coins, so be it. Of course, those of us who are more maxi would prefer to do everything in Bitcoin just natively, but I understand there's a lot of people who aren't ready to go there yet, and so be it.
It's always fun to go back in time to think about, what would you have told yourself, right? So with that being said, where we're at today, which we spent majority of this conversation talking about, if you had to go back to 2013 and talk to yourself, what would that conversation be like, and what sort of advice would you give yourself then, and then what sort of advice do you think that puts yourself going forward?
I'll go first.
Run for it.
I regretted spending my Bitcoin every single time I spent my Bitcoin. Regretted every single time. There's not one time where I'm like, that was great. I'm so happy I spent one Bitcoin on a hamburger in Berlin. Zero.
But to that point, then why do we look at Bitcoin as a payment method to some degree, right? Like if your biggest regret is to spend it, why is the conversation about Lightning to provide the ability to spend?
Yeah, so this could be a pretty lengthy answer here, but basically money serves three purposes. It's a store of value, medium of exchange, and unit of account. Unit of account is like when you go to the grocery store, it's all priced in dollars. Medium of exchange means you use it, but you don't store value in dollars. Everyone knows that you're losing 4 to 5% a year with inflation. That's why you put it in a money market account, right? So people even know that the dollar is a terrible way to store wealth over time. You put it into the S&P or some other asset that's inflation adjusted and has a real return. No one ever questions you if you're like, yeah, I like gold. No one's ever going to be like, well, when was the last time you paid for something in gold? You're like, it's a store of value. Bitcoin's the same way. Gold is not accepted by almost any merchant in America. I'm sure there's a handful that do it for marketing purposes, but outside of that, gold is largely a store of value asset. But gold is considered the most quintessential form of money ever to exist. It's in movies of people in Rome and Greek civilizations and medieval civilizations and even all the way up through World War I. So gold is the quintessential form of money, but yet it is not used as a medium of exchange today. So a money clearly doesn't have to be all three. And in the early stages of Bitcoin's adoption, you must first store value in it before you'd want to spend it. Sort of putting the cart before the horse, where it's like, hey, you should spend it. And I'm like, I don't even have it. And so first people must believe in Bitcoin as a money and store value in it. And then someday, many decades from now, and this isn't like a binary thing, it'll be gradual, more Bitcoin's price will stabilize and almost everyone will own it. And then people will be like, I'd rather settle in Bitcoin than dollars. And that's when I think the big swing towards Bitcoin as a medium of exchange and unit of account really occurs. But I think it's a little early. And because it's so early, it's caused some issues. We had a civil war in Bitcoin. The Bitcoin Cash community forked off because they so much believe that Bitcoin is meant to be a medium of exchange, and they wanted to change the protocol to make it better for that. Well, better. There's a long, deeper narrative here, but I think it was a very distracting narrative to where it led to a civil war. It led to a lot of people thinking that Bitcoin had failed because it wasn't being adopted as a merchant payment method. So yeah, I think, for me, store of value, that's why this conference is so gigantic, is that people really bought that narrative because it's what people are buying Bitcoin for. It's a speculative gold 2.0.
Yeah, I would just say there were different understandings and conceptions of Bitcoin. In the earlier days, a lot of talk about things like remittance or remittance, like that was kind of a common narrative. Because people were talking about things like, banks aren't open 24/7 and there's chargeback risks and some. And okay, yeah, some of these things are true, but I think the store of value component of Bitcoin was just so much more valuable. It was just so much more important that, okay, even while these other things were true, it was really, how did you do it right? So I knew some people who I knew of, not closely, but I knew of some people who, they tried to take some of that Bitcoin and start businesses with it, or they tried to live off that Bitcoin really early and they didn't have some other job or business, and that was probably the big mistake, right? If you just got these things right, you did it well. Like if you just bought Bitcoin and held it in self-custody, that was if you just got those two things right, you pretty much were golden, right? But where people screwed up is they tried too hard to maybe they were trying to trade and time the market, and they weren't good at that, and it was extremely volatile. Or they were trying to live off it too early. They didn't have enough income so that they could kind of keep that Bitcoin hodled and just spend out of their fiat earning. So really, it's just kind of, most people wish they just went harder on buying and hodling and just, let it appreciate over time, let number go up happen, don't have number go up derangement, just accept. That's why many people are here. That's part of Bitcoin's story. You don't have to sort of downplay or kind of virtue signal that, I care, you care about number go up and I care about the freedom and the whatever. That's just, I'm in the tech, right? Everyone's seen that meme of the guy, he's wearing all this gold stuff and he's like, I'm in it for the tech. It's, just be honest,
I've got two funny quick stories on that. One is that I had a buddy who had 1,000 Bitcoin, and he's actually a friend in Austin. But I knew him back. He used to live in New York, and he was really early, 2013 era. He was in the conference circuit. He had built an exchange. They got bought. He had 1,000 Bitcoin, and he sold all of his Bitcoin at $1,000 because he was a millionaire now. He's got $1 million fiat bucks and no Bitcoin. So the lesson there was never sell all your Bitcoin. His regret, I remember seeing him in 2017 because he had sold in 2016 on the price run up. I'm like, hey, well, maybe you buy back in a little bit. And he's like, nah, it's too high. Now he could have had 100 million, or he could have had $100 million. So yeah, a lot of people sold all of it where they're like, I'm timing it, I'm smart, I think this is the top. they didn't have a principled strategy of exiting their position in any sort of reasonable manner. They also were like, oh, I'm a millionaire.
Yeah.
Cool. Well, what now? You're like 26. Like, is that a lot of money? Is it a little bit of money? So there was that. I feel like there's a lot of people like that. And then another one that was really sad was a lot of early Bitcoiners spent all their Bitcoin keeping their companies afloat. They cared so much about Bitcoin that they were building their startup to go solve a problem for Bitcoin users. And Jesse's publicly stated this story, Jesse Powell from Kraken. He sold 10,000 Bitcoin to keep Kraken afloat. But there's a lot of stories where people sold 10,000 Bitcoin and they lost their company too. And so that was a really sad era and very brutal area in the 2015, 2016 bear. It was just a very cold winter. And so I feel for those Bitcoiners because they cared about Bitcoin so much that they sold their Bitcoin to keep their Bitcoin companies afloat. But that's a little sad story there, but yeah.
It's a very depressing way to go out.
Sometimes you make the most money by doing as little as possible, just buying it, holding it, and I think that's why the loan products are so important because everyone I know, no matter how much money they have, they could be billionaires, they never sell any of their stocks. They take a loan against it. Why pay a 20%, cap gain when you can pay 6% interest? So I think those loan products are, especially important. I know people who are like, oh, I want to buy a house, because my Bitcoin's finally worth $1 million, and it would have been nice to have you just loan against it and use that to get your house. So I think, seeing those things those adjacent products around Bitcoin, for people to be able to stay in but still get some use out of it's incredibly important.
When we think about being at all-time highs, and the stories are interesting because you have to look at the past to really understand how do we approach the future, right? So if we think about the stories of someone selling an asset to keep a company alive or a dream alive in that sense, or sell the assets because they're trying to time it. Being at all-time highs, I remember, people taking a mortgage on their house to buy Bitcoin, and Bloomberg CNBC talking about this is the absolute worst thing in the world. How can you do it? And obviously, it's a very scary trade, but it worked out in their favor in many ways. Assuming they did it with the right risk means. How should people think about it today as people, all of us on stage who have really bought all into the industry, but managing risk correctly? How do you guys approach that personally? How do you think about it? Because the last thing anybody wants from anybody else is to blow up.
So managing catastrophic risk should be your base level of thinking. So one is that I store most of my Bitcoin in cold storage. But I have my anti-suicide amount on an exchange. If I messed up my cold storage horribly somehow, which I haven't, and I trust myself mostly, but it's like a self-insurance against myself. So, I do keep a little bit on exchanges just in case that happened to where it's like I wouldn't want to jump off a bridge, right? Also, very long time ago when they first came out, moved my backup, my 12-word mnemonic, onto metal. These sort of basic anti-catastrophic moves can make you much more resilient. A lot of people wrote down their 12 words on paper, and then their cleaning lady took it and threw it away, and they forgot their PIN number for their device. So basically just managing your catastrophic risk. Also never have your backup in the same home as your device, because what if there's a house fire, or there's an earthquake, or or tornado? So, managing catastrophic risk, I think, is kind of like the base level of thinking. Also, and then remembering that, what are you saving this money for? Like if you're older, let's say in your 80s, and let's say you hodled a long time, well, you don't have a lot left in your life, so you should probably think more about how do you want to spend it. There's nothing wrong with spending the money. The reason why you saved money is because it's sort of like this stored battery of energy that you can use to go buy things to make your life easier, or to give you a house over your head, or feed yourself. So at the end of the day, when it comes to your wealth creation with Bitcoin, like what's the point? You only live once. So there's hodling, and hodling allows you to create wealth over time if you hold on to it long enough. But at the end of the day, you got to think also about, why are you spending this? Is it being well spent, or is it a more frivolous thing?
Yeah, I think obviously things like multi-sig and maybe things like Miniscript will start to allow, maybe at least at the individual level, these sort of special like inheritance pathways or kind of emergency recovery pathways the base level setup could be like a 2 of 3 or a 3 of 5 multi-sig, different locations, different hardware devices, all the normal stuff, but then have backup spending pathways. So that's one example to kind of manage the catastrophic risk that Dan was talking about. Things like if you are engaging in borrowing against your Bitcoin, make sure it's a small fraction of your stack that you're borrowing against, that you're not putting too much of it at risk, that you stay within certain safe levels as opposed to kind of YOLOing and going all in on a particular loan or a particular thing. Like do it at a certain percent, a fraction of your stack. Be mindful. Like one thing that I would say is really it's hard to do, right? Because most people, like we are emotional, we're psychological, we get sucked into the narrative at the time. But remember, in 2021, the narrative was like, we're going up, or there was kind of the super cycle stuff, that like you got to understand that we're likely to have these cycles. Now maybe the drawdowns won't be as bad. Maybe it won't be 80% down. Maybe it'll be 60% down. None of us knows. But just be wary of that. And so then if you are borrowing against your coins, then you should also think, well, okay, just to make sure I'm not kind of borrowing at the top, am I collateralized enough, or do I have enough in reserve that I can put some back in, even if we took a 60% drop, that I'm not going to get liquidated? If that's an example, right? So just there's a kind of a counter after you've been through a few cycles, you sort of start to feel of that feeling of how to sort of think counter-cyclically. Like I'll give you another example. That recent drop from like 109 down to 75,000. People were panicking like it was the end. But like people in the know were like, this is an amazing time. This is a discount. Like if I've got any spare fiat, let me put it in now because this is the time. And so after a while, you sort of start to feel like, okay, the narrative right now is crazy bullish. That means I should actually be a bit more cautious, not necessarily selling, but just kind of don't take any levered positions at this time. And then on the downside, that's kind of like when they're all running away, that's the time you should be like, okay, can I sell some other asset and buy more Bitcoin? That's a few things that's at least how I think about it.
Yeah, I think it's always nice to have some dry powder because one of the only things you can control investing is the price you get into it. So we don't know when Bitcoin's going to go down, but we know at some point, it will go down. And yes, it's exciting that, it's 110K and the vice president's talking about it and the president's talking about it. But I'm actually more excited when the next, 40% drawdown is so I can accumulate more. And then sort of the other thing I always think about when I'm investing in any asset, like if I'm nervous going to bed, that means I'm too over levered or the portfolio is too risky. So just sort of not being emotional, but just being in touch with your emotions. Like if you're panicking over an investment, any sort of investment, that might mean that your risk is too high.
And Morgan Housel, he wrote the book The Psychology of Money. And it's a really easy read. I recommend everyone check it out. He has a really good thought in there, which is there's investing practically versus investing rationally. Investing rationally is like 100% Bitcoin. You're going for performance. But investing practically, are you going to be able to sleep at night? Now, when I first got into it, I was in my mid-20s and don't have a wife and kids or anything to where it would have been like a big consideration if I had lost it all. But if it makes you sick every night, at the end of the day, you got to be able to sleep and stuff. So, there's investing practically versus investing rationally. Where in the book, Morgan Housel talks about how he's paid off his house all with cash, just because it makes him feel good to sleep at night, knowing the mortgage is all paid off. It may not be the most performant portfolio strategy, but it's the most comfortable one.
Well, I just look at my watch. I know we're over. So I want to thank you guys for joining us. The fact in 2013, I was still in college. Would rather use the money to buy a beer versus buying Bitcoin, but you guys took that chance. So thank you for continuing helping onboard new users, educate the world on the asset class, and thank you for everybody for coming.